moment. Pleasure at the pump. Yes, we've seen that for the last several months. Gasoline prices down nearly 80 cents from 1 year ago. The average U.S. consumer could see prices falling even further. Just this morning on Mornings with Maria, in a Fox Business exclusive, ExxonMobil CEO Rex Tillerson said that with an influx of global supply, the goal of U.S. energy CEOs is to secure the U.S. energy future. Listen.
We've moved from an era of energy scarcity where we were more concerned about sourcing our supply from countries around the world, some of which we knew were going to be unstable from time to time. Now we've moved to an era of energy abundance. And I think the forward-looking people will be looking at how do we take this era of energy abundance now and secure our energy future from an energy security standpoint for decades to come.
Yeah, and he left out the part about and make money doing it, because that's been a trouble right now. And there's now new speculation that Iran has plans to flood the oil market with supply, and we're getting bigger details on the number. What will that mean for the oil market globally and here at home? Eric Bolling traded oil for years. He's now the host of The Five on Fox News. I love this. Iran's going to open its tap. We really should be calling it the floodgates.
Yeah, floodgate. 45 million barrels that they're going to throw onto the market. That's just the beginning, Lizzie. Once they say once the sanctions are lifted off Iran on this new Iran deal, they're going to put 45 million barrels onto the world oil market. That should have an initial effect. The bigger picture, though, is they produce around 3.3 million barrels. No one's allowed, none of the industrial nations are allowed to trade with Iran right now. But once those sanctions are lifted, that's 3.5 million barrels now that'll come back onto the oil market. We're giving them $150 billion cash that they say is theirs. What are they going to do with the cash? They're going to beef up their oil production. So expect Iran to get to a 4 million barrel per day production. That's additional supply into the market. So all these supplies, prices would go down. One of the up arrows, let's call it that, one of the arguments for higher prices are U.S. rig counts are going down. Rex Tillerson talked about the U.S. being flush in supply, and that's because of what's going on in the shale market and the natural gas market. So we're flush that way. But as the rig counts go down because there are lower prices, you're pulling U.S. supply off. Now, the U.S. is the #1 producer of oil.
But we can get that back, Eric. With the flip of a switch and the sending the rigs back out.
No, not necessarily a flip of a switch, but fairly easily you can get the rig counts back up within maybe a 3 to 6 month period, so that can go up. My whole issue here, the whole thing here is it's going to come down to U.S. GDP. Now, people are saying 2%, 2.5%, 3% growth going forward. I don't think it's going to be like that, Lizzie. I think it's going to be sub 2% growth going forward, just based on what you're seeing in the economy, in the global economy, in China. If you get a sub 2% growth on the GDP, oil prices have to go down. Right now, we're kind of hovering $45 a barrel for a while. Feels like it's in balance, the supply and demand imbalance. If that GDP number starts to slip, erode a little bit, a lot of economists are saying it will.
Janet Yellen can't tighten rates in December, even though today she said it's a live one. We have a live possibility of a rate hike in December. So you're saying that cheaper oil hurts GDP? Cheaper
oil in the long run helps GDP, but in the short run, there are people who will say cheaper oil is going to pull rig counts out. Employers are going to, Rex Tillerson is going to have to lay some people off.
Okay, that's called boom and bust, Eric.
No question. But here's the thing, Lizzie. What's the case for a $100 barrel of oil? I really can't make one right now. I can give you a case for a $30 barrel of oil. Supply is overhang. GDP is slowing down global. Look at China.
And for those of us,
we've been talking about China slowing down for 4 months.
Fox Business 2007, 2008, oil was $147 a barrel. Who even knows why? We do know this, that OPEC has absolutely no consistency.
Happened since then, though? What happened since then is we realized that you can frack and you can pull natural gas and oil condensates out of rock formations, which we didn't then. The $140 a barrel, we weren't fracking. We were environmentalists were telling us not to do it. So now we found a new way.
Right.
Yeah.
They did the drill, baby, drill. They did it. Environmentalists did not win that battle.
Frack, really.
Frack, baby, frack. Yeah. And the price goes down, and now they're complaining that they have to lay people off. Be careful what you wish for.
No, I don't think anyone's complaining. The oil patch is complaining they have to lay people off, but that's normal business cycles. They're going to lay, you're going to lay off some of the least economical ways of producing oil. I think this is great for the economy.
Are
I
we
think
going to $1 a
term,
gallon gasoline soon?
No, but I think we're going to get sub-2 fairly soon. $1.75,
$1.98 in Edgewater, New Jersey.
But think about this. At $1.95 versus a year ago, you're talking $300 or $400 billion of a stimulus package into the economy right now. That's $300 billion that we're not spending on oil, that 45% of it we're buying from somewhere else. It's all good news.
Eric Bolling, he knows the ins and outs. You can still do the hand signals, too.
Why is he rapping?
Rap. Don't rap this face. This punum's got to stay. Great to see you, Eric. Eric Bolling. Hey, be sure to watch Eric on the 5 Fox News channel every day, 5 p.m. Eastern. Closing